Hey everyone, this is Lynn. Today's story is huge. Elon Musk's SpaceX and XAI have officially merged. And the first question on every investor's mind is simple. What does this mean for Tesla shareholders? Let's break it down. Because this is not just another corporate merger. This is the first time in human history that the company responsible for sending people into space and the company building superhuman intelligence have been placed inside the same corporate structure. Hardware and intelligence, rockets and algorithms, physical power and digital brains, now living inside one system. Most people haven't realized what just happened. So today, I'll explain it clearly why it happened, why now, and what it means for Tesla in the long run. If you care about Musk's ecosystem, future AI infrastructure, or long term investing, make sure you watch this to the end. What actually happened? On February 2nd, 2026, Nevada's corporate registry quietly updated a filing. It showed that XAI had been merged into a new entity called K2, later renamed XAI Holding LLC. Soon after, SpaceX confirmed the acquisition on its website. No hype, no press tour, just a structural shift. And most people missed it. This was not two startups combining, this was Musk building the foundation of a new technological civilization. Why K2 matters? Let's start with the name. K2 is not random. In 1964, astronomer Nikolai Kardashev proposed a civilization scale. Type 1 controls planetary energy, Type 2 controls stellar energy, Type 3 controls galactic energy. Humanity today is around 0.73, not even Type 1 yet. By naming the company K2, Musk is signaling something very clear. He intends to push humanity toward planetary and eventually stellar level capability within his lifetime. This is not about quarterly earnings. This is about infrastructure for civilization. Why Tesla was not merged? Many Tesla shareholders panicked. Why merge SpaceX and XAI but not Tesla? Did Musk abandon Tesla? No, Tesla was never supposed to be merged because Tesla plays a different role. Think of it this way. SpaceX handles transportation. XAI handles computation. Tesla handles terminals. Infrastructure, intelligence, interface. SpaceX and XAI solve invisible problems, the backbone of the system. Tesla builds physical products that people touch, drive, and use cars, robots, devices. Just like Apple doesn't buy Amazon Web Services, Tesla doesn't buy satellites. Different layers, Tesla is not excluded, it is positioned. What happened to Tesla's XAI stake? Before the merger, Tesla held about $2 billion in XAI equity. At a valuation of roughly $50 billion, that meant about 4% ownership. After the merger, that stake was converted into equity in the combined entity. Now let's estimate. Conservative case, SpaceX, 800 billion. XAI, 50 billion. Combined, 850 billion. Tesla's stake, about 0.24%. Aggressive case, SpaceX IPO at 1.5 trillion. XAI grows to 100 billion. Combined, 1.6 trillion. Tesla stake value, 4 to 5 billion. So short-term, ownership was diluted. Long-term, exposure increased. Tesla didn't buy XAI. It bought a ticket into space AI infrastructure. The bigger strategy, space data centers. Here's the real story. By 2030, USAI data centers alone are projected to consume 347 gigawatts of power. America's total power generation today is about 490 gigawatts. At this pace, AI will consume most national electricity. Musk knows this. That's why he has talked for years about moving computing into space. But who can do that? Only SpaceX has rockets capable of lifting 100 tons to orbit. Only XAI knows how to harden chips against radiation and operate autonomous systems. Only Musk controls both. In orbit, there are no engineers. Systems must diagnose, repair, and optimize themselves. That requires AI. Space data centers require rockets, chips, algorithms, all three. Only one person controls all three. And so this merger is not additive, it is multiplicative. Transportation times computation equals monopoly infrastructure. What SpaceX is becoming. SpaceX is no longer just a launch company, and it is becoming space-based AWS, space-based OpenAI, orbital cloud infrastructure, not selling products, selling platforms. Other companies will run on it. And once you control infrastructure, you control economics. Why February 2026? This timing was not random. Three windows aligned. Window 1, IPO countdown. Bloomberg reported SpaceX plans an IPO in late 2026, targeting 1.5 trillion valuation. Without XAI, that would be hard to justify. 97 times sales multiple is extreme for a launch company. With XAI, SpaceX becomes cloud plus AI plus infrastructure. Now the valuation makes sense. Window 2, Starship testing. In mid 2026, Starship aims for full orbital reusability. If successful, launch costs could drop from 100 million to 10 million per flight. After that, XAI's value would explode. So SpaceX bought XAI before that happens. Timing arbitrage, window 3, Grok 5. Grok 5 is expected in early to mid 2026. It is projected to double Grok 4.1's parameters. Major upgrades in reasoning, multimodal intelligence, and emotional modeling. If Grok 5 succeeds, XAI's valuation surges. Again, SpaceX moved before that. Musk didn't wait for perfect timing. He created it. Market reaction to Tesla. After the announcement, Tesla stock barely moved, up 0.7%. Why? Because expectations were too high. Rumors said Tesla would merge fully. Tesla would dominate K2. Tesla would control the entity. Reality? Tesla holds a small stake. Useful, but not dominant. So short term, some disappointment is natural. Some funds bought Tesla hoping for full exposure to SpaceX. That didn't happen. Selling pressure is possible. Three major synergies for Tesla. But long term, Tesla gains in three powerful ways. 1. Cost synergy, Starlink. Every Tesla vehicle needs connectivity. For updates, maps, diagnostics, streaming, navigation. Today, Tesla pays telecom companies hundreds of millions per year. With Starlink integration starting in 2026, Tesla can bypass carriers. Internal network, near zero marginal cost, estimated savings, 300 to 500 million per year, pure profit. No competitor can copy this. 2. Data synergy, FSD to XAI. Tesla's FSD fleet generates the world's largest real-world 3D dataset. Millions of cars, 8 cameras each, continuous physical interaction, and this is priceless. Text trains language models. Images train vision, but robotics needs physics, balance, force, gravity, motion. FSD provides embodied intelligence data. XAI can use this to train Grok for robotics and automation, which then feeds back into Tesla Optimus. This is not licensing. This is ecosystem optimization. 3. Equity synergy. Indirect ownership. Most investors cannot buy SpaceX or XAI. They are private. But Tesla provides indirect access. If SpaceX IPOs at 1.5 trillion, Tesla's stake becomes 3.5 billion. At 2 trillion, around 5 billion. Small today, but Tesla has 30 billion cash. It can increase exposure using cash, data, chips, all exchangeable for equity. Optionality is enormous. Why Tesla still matters most? Many think if SpaceX wins, Tesla loses. Wrong. Infrastructure makes money. Interfaces capture users. Tesla is closest to humans. People don't ride rockets. People drive Teslas. People will use Optimus. History teaches this. Companies closest to users survive. Microsoft builds servers, Apple builds devices, Apple wins. Why? Because users care about experience, not backend. Same here, Tesla's 3-time horizons, 2026 to 2027, foundation, EV business plus synergy, stable cash flow, lower network costs, better AI training, not flashy, very strong, 2027 to 2029, Optimus scale, Optimus mass production, already deployed internally, full rollout coming, potential robot market 14 to 21 trillion, bigger than EVs, faster replacement cycles. This is Tesla's growth engine. 2030 and beyond, Mars. Mars bases need robots, vehicles, autonomous systems. All Tesla domains, SpaceX delivers humans. Tesla builds civilization, millions of robots, massive new markets, no competitors, cars keep Tesla alive. Optimus makes it soar, Mars makes it immortal. Ha! Final perspective. Right now, some Tesla investors feel disappointed. 0.2% stake seems small. Short-term weakness is possible. But long-term, Tesla is becoming Musk's interface company. Not just cars, not just robots, a gateway to the future ecosystem. Buying Tesla is not buying a car company, it is buying a long dated option on human expansion. So, what does K2 really mean? February 2nd, 2026 was not just a merger. It was the moment humanity started treating space and AI as one system. Whether you care about Mars or not, you should understand where the world is going, because this is the infrastructure layer of the next century. What do you think this merger means for Tesla's future? Let me know in the comments. I'm Lynn. See you in the next video.